Today I've done a deep dive to expose who created those synthetic AMC tokens and who stood to benefit the most if AMC ever decided to issue those STO securitized token offerings. And guys, I have to say it was a very cunning and evil attempt. So stay tuned and let's make some money. This video is going to talk about Bittrex, CM Equity, FTX and Alameda, interactive brokers, Citadel and a whole host of other people. And this video is going to go full circle into who I think are the two main players currently shorting AMC. And now I want to dive straight in with the key information. So, Richie's Penny first uncovered the connection between Bittrex, FTX and Alameda and interactive brokers. We can see from the Bittrex website, it says that Bittrex Global itself lists tokens that represent derivative contracts collateralized by the underlying traditional equities. It says these tokens are backed by shares of stock powered by CM Equity. Okay, CM Equity is the company that should be holding these 400 million and 625 million AMC shares. And it says CME or CM Equity who purchases the underlying securities through interactive brokers and maintains the restricted digital token representing the financial interests in the underlying traditional securities in the account of Alameda. So CM Equity should have or was purchasing these AMC shares through interactive brokers. So it was interactive brokers that failed to locate and actually acquire these AMC shares. And it says specifically here, interactive brokers holds the underlying securities in a custodial account for and on behalf of CM Equity. So therefore, even though CM Equity was responsible for buying these 400 million and 625 million AMC shares, it should have been interactive brokers that was locating and acquiring those shares and holding them on CM Equity's behalf. But now it doesn't stop there. Day Trader POS tweeted saying, so just to confirm, this whole time Mark kohrs was trying to have AMC legally become a tokenized asset, so that him and his pals could rug pull us legally and trade all those AMC synthetic shares that had been created and held by interactive brokers. Now there was 400 million synthetic AMC shares traded on FTX, but it could have been significantly worse if AMC actually issued that securitized token offering. Because that way these AMC synthetics could have been traded on FTX, they could have been traded on Bittrex, and they could have been also traded either on the stock exchange or TZero or wherever these STOs would have been traded. And it actually gets even more sinister than that. Retail Stocks tweeted saying one more thing on the STO securitized token offerings. He said where they wanted to use AMC to securitize the token, they also wanted you to use TZero as a platform to do that. And he said, therefore, it's good to know a little bit more about TZero and who actually owns TZero. We can see here the BSTX TZero Exchange, which is the alternative trading system. This exchange is owned 50-50 by Box Digital and by TZero. Now, Box Digital itself is held by Box Holdings and also held by TZero as well. But it's the holders of Box Holdings that are really, really interesting. So Box Holdings is held by Citadel, which is obviously a red flag, but also by interactive brokers as well, another red flag. Interactive brokers should have been holding 1 billion AMC shares on behalf of CM Equity for FTX and for Bittrex. But obviously not only is interactive brokers not holding 1 billion AMC shares, there isn't actually 1 billion AMC shares to go around unless they've been created synthetically. So we can see here that interactive brokers are affiliated not just with the FTX synthetics, not just with the Bittrex synthetics, but they would have also been affiliated with the Mark kohrs STO. And on top of that, something that makes interactive brokers even worse is this tweet from Odd Diligence. They tweeted saying IBKR or interactive brokers announces overnight trading for 24 separate ETFs, including the QQQ and the S&P 500, 23.5 hours per day of continuous trading. And now I'm sure it won't be long until interactive brokers releases 23.5 hours per day trading for those single stock inverse AMC ETFs. That means these hedge funds could be shorting AMC indirectly through the inverse AMC ETF 23.5 hours per day. And they said obviously interactive brokers already had futures, but with binary options and 23.5 hour trading, interactive brokers is turning more and more into a 24/7 casino. This here would enable clients to trade select US ETFs for 23.5 hours a day, 5 days a week. Which obviously if it's passed for those inverse AMC ETFs would allow for an almost unrelenting AMC short attack. And if you haven't already, be sure to sign up to Moomoo using the link in the description below. You can currently get $10 absolutely for free and 15 free shares on top of that, worth up to $2,000 each. And while you're down there, be sure to join the free Discord again, linked in the description. There we talk about AMC and share due diligence all day long. But even these institutions know that AMC will still squeeze. Hang Loose tweeted this photo saying the first circle is the moment that Adam Aaron announced the AMC float was held 80% by retail investors. The second circle was the moment that Adam Aaron announced the float was held 90% by retail investors. Between Circle 1 and Circle 2, the price of AMC fell, even though retail investors were increasing their shareholdings from 80% up to 90%. But at the same time, if we look at the institutional holdings, the first blue circle is the date when retail investors held 80% of the float. And again, the second circle is when retail investors held 90%. So somehow we've got institutional investors increasing their AMC shareholdings and retail investors also increasing their AMC shareholdings at the exact same time. We've got institutions buying more and retail investors increasing their holdings, but yet somehow there's an unlimited number of AMC shares. Even though right now there seems to be unlimited AMC shares, these institutions are still increasing their AMC shareholdings because they know AMC will squeeze. He said there's only 3 groups of investors in the stock market: retail investors, institutions, and ETFs. And he said combined, all 3 groups collectively increased their holdings in AMC over these 9 months by buying up 120 million more shares, 25% of the entire flow. And he said we need to demand answers on how a stock falls 80% when every single group of investors in the market was buying more shares. On top of that, the Moon Traveller tweeted, so looking back on Hang Loose's post about institutions increasing their AMC holdings and yet somehow not holding any APE shares according to those 13 Fs. He said who is actually holding all of those APE shares and who's trading them. And Hang Loose tweeted saying, wow, what a hot take. Fidelity is showing that retail investors hold 99% of the APE flow, but who is holding all of the institutional shares that they're using to high frequency trade? The price of APE is dropping day after day after day, but who specifically is holding those shares that are being traded and why aren't they being reported on the 13F filings? If we look at the 13F filings for APE, we can see these institutions are only holding 200,000, 60,000 and 66,000 shares. There's only a very small portion of the APE float being held by institutions. And therefore, where are they getting all of these shares legally that they're using day after day after day to continually short the APE stock? If APE is being traded day after day after day by these HFT firms or these high frequency traders, at some point for 13F filings, somebody has to report their ownership of APE. But yet so far, it seems to be a miss. The only logical answer is because the shares being traded on APE are synthetic shares being created and not reported. And to prove this, we can look at the on-balance volume as tweeted by Eric Cuttill. We can see even though the price of AMC has been falling over the last year and a half, the OBV or on-balance volume has remained steady. The on-balance volume is showing 4.8 billion shares of AMC that have been sold but not yet covered. The on-balance volume should really tie in with the short interest, but obviously in the case of AMC and other stocks like GameStop and APE, it doesn't. But we also see tons of other hedge funds and institutions out there that have billions of dollars worth of stocks sold and not yet purchased. I think the OBV is very heavily interlinked with these hedge funds that have such a giant figure of securities sold not yet purchased or not yet covered. But finally, as Frank Capillieri tweeted, there is currently a big test on deck for the S&P 500 and for the VIX. Now, obviously, the lower the VIX goes, the more confidence there is in the market. Every time the VIX bottoms out, it's because the S&P 500 is having a bear market fake out and is running upwards. Right now, we're currently at the point where the VIX is testing the trend line and therefore is about to reverse, and therefore we're about to see the next leg down in the market crash. Even though the S&P 500 hasn't quite reached this point at the 410 level or the 4,100 level, the VIX is ready to flip again and the S&P 500 will continue to crash. This next leg down in the S&P 500 is expected to be the largest yet, in line with the 2008 financial crisis. And obviously when the market does crash, it will cause this massive wave of liquidations and the second wave of liquidations causing the AMC squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.